Hi guys, so now we are going to look at chapter 6, question number 7, right? So in this question it states prepare a full set of accounts starting from trial balance. So Asif is the owner of a general store. His business has been trading for 11 months and his trial balance at the end of his period is as follows. So we have the trial balance for 11 months, okay? And then during the December month the following transaction occurred. So December month we have the following transaction, and the question is asking us to make the ledger and then the trial balance at the end of 31st December 2014, and we are also supposed to prepare income statement and capital account, and lastly we have statement of financial position, which is balance sheet, right? So you guys need to remember one thing, that here it says 11 months. So 11 months mean this all balances are going to be in my T account. So when I prepare my T account, I need to make sure that this is, by the way, page number 49, yeah. So I need to remember that whenever I open my account, the balance is going to be sitting over there. For example, administration expense, let's say I write here AE, so the balance should be here, okay? Even though it's an income statement item, I will be putting this item in my T account because this is for 11 months, okay? 11 months, the emphasis on 11 months is a lot, okay? So when I prepare my T account, I need to have my balance, okay? So I put my balance over here. I repeat, I am putting this balance over here, although this is an income statement account, because this is for 11 months. If it was for 12 months, income statement items do not have balance brought down. So there is no balance brought down for income statement items. However, in this situation, we have accounts for 11 months. So there is no balance brought down in income statement item. So this statement is only valid for 12 months, for one period, okay? So this statement is only valid for one period. So this 11 month is not a full period. We have to make it 12 months, okay? So what we do is we add all the balance. So does not matter whether the item is a balance sheet item or an income statement item, we are going to add it no matter what. So it doesn't matter if it's an income statement or balance sheet item, we will add all these balances. We will open account for administration expense, bank loan, capital, cash, drawings, fittings, loan interest, purchases, rent, sales, trade payable, receivables, vehicle and wages. All these accounts we are going to open and we are going to have these balance. So I am going to have all these balance, okay? So if it's a bank loan, then I know it's on credit side, capital is on credit side, cash is an asset, drawings, fittings asset, loan, right? Loan, interest. So interest is an expense, payable. Then I have purchases, expense. Then I have receivables, asset. Rent is an expense. Sales is an income, okay? And then I have vehicle account. And lastly, I have wages. So I'm going to put all these balances in my T account, and after that I'm going to do these transactions, okay? And after that I'm going to do this transaction one by one. So purchase goods for resale and paid by check. So I know I'm supposed to debit my purchase and credit my check. So I just need to go to my purchase. Okay, so where is my purchase? Okay, so here's my purchase. Okay, and I go to my bank account here. So I'm paying by cash, so my money is reducing, credit it's reducing, and my sales, my purchase is increasing. Okay, I am receiving the goods. Then cash sales, so I receive the money and I give the goods. So credit sales and debit cash. And then received cash from credit customer, I receive cash, debit cash, and credit trade receivables. Paid rent, then I have paid and I'm paying, so I credit my check, credit my bank account, and debit my rent. So all these entries you should prepare, and at the end of the day you should be having this. So you can take note, maybe pause the video and reconcile back, recheck your T account, and then see if it's correct or not. Okay, so remember, this is a trial balance, right? It balances. Here it's balances. So these all transaction, after posting all these transaction, this is a double entry concept. So if I debit 2200, I must credit 2200. So after I post all these entries, the new trial balance I make should also balance. If it doesn't balance, then it means something is wrong. Either you have skipped an entry, or either the total, you might be placing debit as credit or credit as debit, right? And then we are supposed to prepare income statement. So once we have the trial balance, so this will be probably based on allies, right? So you take all the assets, put them on debit side, expense on debit side, and drawings on debit side, rest of the things are credit. Okay, and then we choose which items belong to income statement. So I know my income and expenses only belong to income statement. Other all items will go to balance sheet. So this is an expense. I know this is an expense. It's an interest, not loan only. Interest on loan. So purchase, I have rent, I have sales, I have wages. So these items, few of the items belongs to my income statement, and you should be having a very concise income statement here with this figure, with this profit. Okay, so we minus all the expenses from the gross profit, and we should be getting 7,999. Okay, so it says here C part A for the capital account, because T account is the what they're asking us to prepare. Okay, so this is what exactly they are asking us to prepare. So you do not have to prepare a separate account for a capital account. Once you have prepared, that's all you need, right? And then after that we have to prepare the balance sheet. How do we prepare the balance sheet? We take the items from here, for example bank, loan, capital, cash, drawings, fittings, trade payable and trade receivables, and vehicle. We take all these items and put them in balance sheet. Once we put them in balance sheet, we should also consider profit. Okay, how do we consider profit? If we see over here, our capital is 31,000. Okay, 31,870. Okay, we take this, we minus our drawings, and we plus the profit. That's what we are supposed to do. We take our capital minus drawings and we plus profit. You should be getting this figure. The total of the asset side should be 26,430, and the total of this side should also be 26,430. So this is all for this video. Thank you guys.